Most people think the only way to get more insurance coverage is to write a bigger check every month. But what if that belief is quietly costing you thousands of dollars over your lifetime? The stakes here are real. One unexpected diagnosis, one accident, one disability claim, and suddenly the gap between what you have and what you need becomes the most expensive mistake you never planned to make. Here's what is actually driving this conversation right now. Insurance premiums have climbed dramatically over the past several years, with some life insurance policies seeing rate increases of 15 to 30%, depending on age and health classification. People are getting priced out of meaningful coverage right at the moment they need it most. And the industry is not exactly running billboards to tell you there is a cheaper way. The system that nobody explains to you at the point of sale is called a rider. And it is essentially a modular add-on that bolts extra protection onto a base policy for a fraction of what a brand new policy would cost. Think of your base policy like a smartphone and riders like apps. You do not buy a whole new phone just because you want a new feature. The contrast between what a new policy costs versus what a rider costs can be genuinely shocking when you see it side by side. A term life policy for an additional $250,000 in coverage for a healthy 40-year-old might run $60 to $90 a month, while an accelerated death benefit rider or a term rider on an existing policy could deliver similar value for $8 to $15 a month. Now, before you get too excited, let us be honest about the psychological trap people fall into here. They hear riders and assume it is a downgrade, like buying the store brand cereal because you cannot afford the real thing. Experts in financial planning consistently push back on that bias because for many life stages, a well-chosen rider actually provides more targeted protection than a bloated second policy ever could. The history of insurance product design tells us that riders were originally created as niche tools for edge cases, but over the past 2 decades, they have evolved into sophisticated instruments covering everything from critical illness to long-term care to waiver of premium. What is deeply ironic is that the most underutilized financial tools in American households are sitting right there in the fine print of policies people already own. Let us get practical for a second, because cycles matter here. Whenever economic pressure rises, smart consumers historically move toward riders and away from new standalone policies, only to forget that lesson when times get comfortable again. The people who locked in critical illness riders back in 2008 and 2009, right, when nobody wanted to think about worst case scenarios, look like geniuses 4 years later when healthcare costs exploded. One of the biggest misconceptions worth dismantling right now is that riders are just sales tactics designed to pad the insurance agent's commission. The reality is that a waiver of premium rider, which keeps your policy active if you become disabled and cannot pay, costs almost nothing up front and could be worth tens of thousands of dollars in preserved coverage during a genuine crisis. Here is your actionable framework, and it is not complicated. Before you call any insurer about a new policy, pull out your existing policy documents and write down every rider slot that is either empty or underutilized. You are not looking for perfection. You are looking for the lowest cost bridge between where your coverage is today and where it needs to be given your current life stage, dependence, and income. The discipline that separates smart insurance consumers from reactive ones is not conviction about which product is best. It is the process of reviewing coverage annually, the same way you review a budget. Position sizing matters here, just like it does in investing. Do not over-insure one risk while leaving another completely naked just because one product was explained to you first. There's something almost poetic about the fact that the most boring document in your filing cabinet, your existing insurance policy, might be hiding the most cost-efficient upgrade available to you. Riders reward the people who read the fine print and punish the people who assume the only lever is buy more. The philosophical reality of insurance is that you are not buying a product. You are buying a decision framework for your future self who will not have the luxury of calm deliberation. Discipline now, in the form of strategic rider selection and modest premium increases, is infinitely more valuable than scrambling for new coverage after a health event makes you uninsurable or dramatically more expensive to insure. Whatever your current situation looks like, whether you feel well covered or dangerously exposed, there is genuine comfort in knowing that riders exist as a rational, affordable response to both scenarios. The goal is never to predict exactly what will happen. The goal is to build a structure that handles a wide range of outcomes without breaking your budget in the process. The irony of the entire insurance industry is that its best kept secret is also its oldest tool. And most people will never use it simply because no one sat down and walked them through how riders actually work in plain language. Now, you are not most people. If any of this sparks something for you around protecting your assets, your income, or the real estate investments you are building, we can help you get started, whether that is real estate investing, home contracting work, or finding the right lenders. Check out our links in the description below.